So guys, today we are going to be learning. Can you hear me? Can you guys hear me? If you can hear me, just say yes so I can know. Today we're going to understand the forex trading sessions, different types of traders, and different types of the different types of analysis that we have, because we are gradually going into serious business. So now, let me beat GDP. We have forex trading sessions. In the forex market, there are different types of trading sessions. It means like when the market opens for different countries. Do you get me? So the trading sessions are the times that market opens for different countries. We have the London session, which has to do with trading in the United Kingdom. London session has to do with trading in the United Kingdom. And the time is when the market opens by 7 a.m. and closes by 4 p.m. Do you understand me? So the London session, when the London market is fully active, it's from 7 a.m. to 4 p.m. Do you get me? Am I making myself clear? Then we have Frankfurt session. I'm coming. Frankfurt session. And this one your account. The Frankfurt market opens around 8 a.m. and closes by 5 p.m. These trading sessions are just when market opens in different countries. You understand? So in the London session, it opens around 7 a.m. and closes by 4 p.m. The Frankfurt session opens around 8 a.m. and closes by 5 p.m. Then we have, and Frankfurt session has to do with trading in trading in Europe. You understand? It's a state in Europe. Then we have New York session. New York session. New York session. Which opens, the New York market opens around 1 p.m. and closes by 10 p.m. So currently the New York market is still open. The New York market opens by 1 p.m. and closes by 10 p.m. Then we have Sydney session. We have Sydney session, which opens around 9 p.m. and closes around 6 a.m. So different traders has their time, like the sessions that they love to trade, the times they prefer to trade. There are some traders that they will tell you that I trade only London session, which is from 7 a.m. to 4 p.m. There are some traders that will tell you that I trade New York session, which is from 1 p.m. to 10 p.m. There are some traders that don't even trade by sessions. You don't really need to trade by sessions. All these sessions means that when, okay, now during New York session, which is in the USA, means that US pairs will have volatility. Do you understand me? US pairs will have volatilities. During London session or Frankfurt session, any currency pair relating to that session will have volatility. When you hear volatility, it means speed, fast. It will be fast in the market. You understand? The market will be moving well. It will not be moving slow. That is what we mean by volatility. Then finally, we have the Tokyo session. The Tokyo session, which is from 11 a.m., 11 p.m. which is from 11 p.m. to 8 a.m. So Sydney session and all these times are Nigerian time. I don't know if is there anybody that is not in Nigeria here? Let me know. If you are not in Nigeria, you can check the time in your own country so you know what you are working on. But based on Nigerian time, the London session opens by 7 a.m. The Frankfurt session opens by 8 a.m. The New York session opens by 1 p.m. Sydney sessions open by 9 p.m. Tokyo session opens by 11 p.m. And when two or more sessions are open, there's always volatility in the market. You understand? So when two sessions are open at the same time, we have volatility in the market. Did I make myself clear? Do you guys understand me? If you understand, say I understand in the comment too, so we can move. If you understand, say I understand though. If you understand what what I mean by forex trading sessions, forex trading sessions is just when the market is open, when the different countries market gets open. Like, I don't even know how I will explain it for you guys. But do you guys understand what I mean by forex trading session? Like now when we talk about New York session, no, that is the market in the United States. That is when they officially open. That is when they start trading in the United States. Like that is when their market is open. It's called New York session. Do you guys understand me? If you understand, say I understand so that we can move. It is just basically when the market is more active in that region. So around 7 a.m. to 4 p.m., the market is very active in London. But around 9 p.m. to 6 a.m. is not active in London. It is active in Tokyo. It is active in every session has their own time zone. Every region has their own time zone on when the market is open. You understand? Okay, so we can move. Now, as a forex trader, you have to know where you want to belong. You understand? You have different types of forex traders. So me now, personally, I'm a day trader. I don't hold trades for so long. I don't hold trades for weeks. I don't hold trades for months. There are traders that hold trades for months. So I'm a day trader. So now you have to understand the different types of traders and know what you want to be, what kind of trader you want to be. So that is what we're going to learn now. Different types, different, different types of forex traders. Now we have the scalpers. The scalpers are short-term traders. They aim for tiny profits. Their own is just to scalp. Like they enter the market, boom, they come out. When they make that profit, they are out. They are just scalping. It is not trading. There's a difference between trading and scalping. So do you want to be a scalp trader? Like, do you want to just be a scalper, or you really want to learn how to trade? These people, scalpers, they are basically known for 1 minute time frame. In the 1 minute time frame, I don't know if I explained time frame in the first class. I just spoke briefly on it, but when I'm talking about how to use TradingView tool, I'm going to dive more into time frames. You understand? Now the scalpers, oh, okay, let's do time frame. Let's do time frame first before we do different types of traders, so you guys will understand, because I will have to use the different time frames to show you guys, to tell you guys more about the types of traders. So now, if you look at here, you see 1 minute, 3 minutes, 5 minutes, 15 minutes, 30 minutes, 45 minutes, 1 hour, 2 hours, 4 hours, and daily, 1 day, 1 week, 1 month. So now let's start from 1 week. Let's start from 1 week. Now, it means that I told you guys that all these things you are seeing in this chart, they are called candlesticks. What did I say? They are called candlesticks. So now, every candlestick that is here, every candlestick that you can see here, means that they were formed in 1 week. It took 1 week for this candlestick that you are seeing to form. Do you understand me? If you go to the daily time frame, it means that every candlestick that you are seeing there, took 1 day to form. It took a day to form. Do you understand? When you enter the 4 hours time frame, it means that every candlestick that was formed here took 4 hours. This tiny candlestick you can see here took 4 hours for it to form. Do you understand? I don't know. Am I making sense to you guys? Am I making sense? When I say when we go to the weekly time frame, it means that each candlestick in that chart, this thing that you are seeing is called a chart. Each candlestick in that chart was formed in a week. Do you understand? When I talk about the daily time frame, it means that each candlestick you are seeing, each candlestick that you are seeing here was formed in 1 day. Like this was formed, and you can see this, as you can see, this was formed Wednesday 17. This tiny one was formed Tuesday. There's another tiny one Monday, Friday. It was formed in 1 day. Do you understand me? If we go to the 2 hours time frame, the time frame just shows you how long the candlesticks in that chart took to form. The time frame is just showing you how long the candlesticks in that chart took to form. Now, in the 2 hours time frame, it means that every candlestick that was formed, that you are seeing, took 2 hours to form. Do you get me? If you understand, say yes in the comments. I want to know if you guys are following. On the 2 hours time frame, It means that every candlestick that is formed takes 2 hours to form. This candlestick took 2 hours. This candlestick took 2 hours. If we go to the 1 hour time frame, it means that every candlestick that you can see here in this 1 hour time frame took 1 hour to form. Am I making sense? If you don't understand, say I don't understand. If you don't understand, say I don't understand in the comments so that I will go back. Do you guys understand me? Each candlestick that you are seeing on this chart, as it is in the 1 hour time frame, took 1 hour to form. If you go to the 45 minutes time frame, every candlestick that you are seeing took 45 minutes to form. You guys understand? The comment section is so dry, like nobody is saying I understand or saying I don't understand. If you don't understand, let me know so that I don't rush. Do you guys understand? Okay. I've gotten I don't understand. What you can see, what you are looking at, what you can see now is a chart. And all these things you are seeing inside the chart is called candlestick. Now, when we talk about time frame, it means how to view the market, how we view the market. Like what the market has done in a particular period. What the market said in a particular period. Do you understand? Now, in the weekly time frame, this shows that each of these candlestick that you are seeing here, this long blue candlestick was formed in 1 week. Do you understand me? Each candlestick that you are I'm sorry, I'm having cough. Each candlestick that we are seeing here was formed in 1 week. If you go to the daily time frame, it means that each candlestick that we are seeing was formed in a day. Time frame is just the period over which you look at price. Now, this candlestick is just the daily candlestick. It was generated, it was created, it was everything in just today, in 1 day. If you go to 4 hours, you see that it will expand. It will be plenty. You understand? We have 24 hours in a day, Abi. So now 24 divided by 4 will show you how many of these candlesticks we use to form 1 daily candlestick. Do you understand? Means that this candlestick that is forming was formed in 4 hours. Every candlestick. Sorry, I have cough. Okay, for instance, I go to the market around. Wait, I want to go to the market. This is 1 o'clock. And I get to the market by 4 o'clock. How many hours did it take me to get to the market? It took me 4 hours, which is 1 candlestick that is here, which is 1 piece of data that is here. Then inside this 4 hours candlestick, we can still break it down to 2 hours. So now 2 hours candlestick forms one 4-hour candlestick. Hey God, I hope you guys are understanding. 2 hours candlestick, as you can see now, all these 2 hours candlestick were formed in 2 hours, 2 hours, every 2 hours. Every 2 hours, a candlestick is being formed. Every 2 hours, a candlestick is being formed. Do you understand? If you go to the 1 hour time frame, you will see that it is more, it is expanded. It means that every candlestick that you can see here was formed in a day, in 1 hour rather. Every candlestick that you can see here was formed in 1 hour. So now, how many candlestick does it take? How many 1 hour candles do we need to form a daily candle? Reply in the comments. How many 1 hour candle do we need to form a daily candle? Reply in the comment section. I'm waiting, oh, you people. How many 1 hour candle do we need to form a daily candle? Nobody. Somebody should unmute themselves and tell me where they are having difficulty. Like, why don't you understand time frame? What is hard about the time frame? Like, I don't want to rush you people. Even if it's only time frame that I will achieve today, it's fine. Somebody should just unmute themselves and start talking. Tell me, what don't you understand about time frame? Hmm? You guys are dulling my vibe, oh, sincerely. Nobody is talking. The comment section is just dry. I'm just talking. Hmm? Should I move on? Abi, am I talking to myself since I don't understand? I shall continue. If you go down to the 45 minutes time frame, it means that every candlestick here was formed under 45 minutes. If you go to the 30 minutes time frame, we can see that as you are getting down to the lower time frame, the candlesticks are expanding. You understand? If you get to the 30 minutes time frame, it means that every candlestick that you are seeing here, they take 30 minutes to form. If you go to the 15 minutes time frame, it means that you can see that as we're getting down to the lower time frame, the charts are getting bigger and longer and more open. You can see the clearer picture. It means that every candlestick that is here was formed in 15 minutes. Every candlestick that you are seeing here was formed in 15 minutes. 15 minutes time, like 15 minutes. If we go to the 5 minutes time frame, it means that every candlestick that you are seeing was formed under 5 minutes. If we go to the 3 minutes time frame, every candlestick that you are seeing here was formed under 3 minutes. If we go to the one, you can see how tiny it has become. If we go to the 1 minute time frame, every candlestick here was formed under a minute. Just watch, another candlestick will open. You see, I told you guys, because this candlestick just closed, so another one has opened and the timer is counting. When this timer is over, another one will open. Let's wait for the timer to be over, then you see another candlestick will come out. It means that every candlestick here is formed under 1 minute. Thank you, Rejoice. We need 24 1-hour candle to form one daily candle. We need 24 1-hour candle to form one daily candle. So 24 1-hour candle is just one of these things you are seeing here. Just one of this candlestick. This thing is called a candlestick, just one of it. You understand? I know that Rejoice used to understand me very well, and I know that she's not the only person in this class. If you don't understand, please tell me, because I want to move on. If you don't understand, say I don't understand. If you understand, say I understand, so we can move on. We have 9 more minutes before this class will end. But I'll send that normally class is supposed to be 1 hour. We have gone 14 minutes, but I'll send another Zoom link so that we'll continue after this class. Give set she understands. Okay. Esther, Joy, Emmanuel. Do you guys understand? Do you guys understand? Okay, so let's continue the different types of forex traders that we have. Different types of forex traders. We have the scalpers. As I said before, the scalpers, they're in and out of the market. They just want to scalp and run away. They're looking for quick money. So they focus mainly on what is currently happening in the market. Do you understand? Okay, now we spoke about time frame. The time frame showed us each time frame shows us what is happening every time. Understand? In 4 hours now, it shows us what candlestick shows us what happened in the last 4 hours. It's a summary of what happened in the last 4 hours. 1 hour time frame showed us what happened in 1 hour. 30 minutes showed us what happened every 30 minutes. What happened in the last 30 minutes. 15 minutes shows us what happened in the last 15 minutes. What is currently happening now. 1 minute shows us what is happening now in the market. What is happening? It is the immediate current market price. You understand? That's what 1 minute candle is forming like. It is forming every minute. It is showing us if the buyers are stronger, that means the sellers are stronger this minute. You understand? That's what the 1 minute time frame is showing us. So now, when we talk about scalpers, they aim for tiny profits, and they are trying to catch quick move. They're trying to catch. Sorry, I'm not feeling too well. They're trying to catch the quickest move in the market. So their time frame is 1 minute and 3 minutes. Sometimes they can use 5 minutes, but they focus between 1 minute, 3 minutes, and 5 minutes. And personally, I will not advise you to be a scalper. A scalper is not a trader. They are looking for quick money. Forex is not a quick to get rich scheme. I don't know if I mentioned this in the first class. Forex is not a quick to get rich scheme. It is an asset building tool. Forex, see, Have this thing at the back of your mind, because when I first learned, this is what they told me. If you have the mindset of I'm learning forex now, by January now I go don buy GLE, don buy GLK, everything, you can never make it though. It's not cap, it's fact. It is not a quick to get rich scheme. It's because many of us we think it is a quick to get rich scheme. That is why we fail. That is why we make losses. You understand? Forex is not a quick to get rich scheme. It is an asset building tool. Emphasis on the asset building tool. It is not MMMO. It is not sporty bet. I just want to prepare your mind now. Okay. So now these scalpers now, they are people that are looking for quick money. Fast profits. ASAP, ASAP. That is their work. And they use 1 to 5 minutes time frame. Then we have the day traders. The day traders, they trade in intraday. They close their position before the market closes. Market closes every day by sometimes 10 p.m., sometimes 11 p.m. and opens around my network. I don't know if you guys are hearing me. Can you guys hear me? My network is shaking. No? Can you guys hear me? If you can hear me, say I can hear you. Can you guys hear me? So now the day traders, they trade in a particular day, and they close out their position before the market closes, because market closes every day. Sometimes some market will close by 10, sometimes it will close by 11. They open, sometimes they can open by 1. So every currency pair has how their own timing when they close, when they open. But between 10 to 12, market is closed. You understand? Then from that 12-1, it will open back. So we have the day traders. These day traders now, people like me, we trade intraday, we trade before the market closes. You understand? But sometimes I might be in a trade and I want to hold that trade over to the next day. So it means I'm swinging the trade. You understand? I'm taking over to the next day. I'm swinging the trade. So we have something called swing traders. Now people wey get iron heart, na dem be swing traders. Because you know wetin e mean to hold trade for months, for weeks, for days. Traders that hold trade for very long time, for weeks, for days, they are called swing traders. They are just based on the trend. They're not interested in catching any 1 minute move or 15 minutes move. Their time frame is from 4 hours daily. They are following the trend of the market. Their time frame is from the 4 hours to the daily time frame. Do you understand me? They are swing traders. They hold trades for a very long time. Then we have the position traders. Now these people, now them get money pass. They can hold one trade. There are some people, as I'm talking to you now, that have been holding one position on a particular pair since January. They hold trade for months. For months, like not me now, as I am, I can hold trade for I've held trades for 2-3 days. I've even held trade for a week before. I've held trade for over the weekend. But that does not really make me a swing trader, because it is something that it's not like I do it all the time. I do it when I have to. But there are some traders that their own job is to be swinging trades. They don't used to look at I'm closing this trade because before the day ends. They swing that trade. They are catching over 1,000, 2,000 pips. Do you understand me? Their goal is to catch. There are traders that catch their normal pips level to catch is 5,000 pips, because they swing trades. And the last one is position traders. Position traders, these people, they hold trade for longer than we expect. Okay? The position traders, they hold trade for months. Before gold got to 4K, there were people that have held the trade for more than 3 to 4, 5 months. They are position traders. They just open a trade and they leave it for months. Those are people that have high capital. So because you're a beginner, you don't have so much capital. You have to stick to being a day trader. Don't be a scalper. Scalper is gamblers. Now people they gamble, the scalp, understand. So I'm going to end this class now because we have less than a minute, and I'll share another link so we can look at our analysis, different types of analysis. So in the next